Good morning to you, Evelyn. Thanks for taking the time. This is one that has, kind of navigated okay, I would say, the coronavirus and the lockdowns and stuff. Nike, powerhouse in athletic wear, and of course, an e-commerce giant as well.
Yeah, absolutely. I mean, look at that chart that they just pulled up on the screen. Nike shares are just off of all-time highs of about $119 that they made earlier this month. And the shares are up nearly 30% year over year. Nike does report earnings this afternoon. Like you said, Alex, they are sort of the one of the last final big companies that will see each earnings season. But this morning, we saw a Baird analyst come out and raise the firm's price target on shares of Nike up to $115 from $95, and the firm kept a neutral rating on the shares. The price target of $115 is only about $1 above from where Nike is currently trading at. But even last week, we saw a slew of analysts come out and adjust their price targets for Nike to the upside. And that just goes to show that I think people are largely expecting outperformance out of Nike for this next quarter, largely in part to those digital sales. I mean, people were still shopping during the pandemic, people that could afford to anyways. And it seems like the athleisure and athletic wear space was a pretty big winner as far as what people were buying over their lockdown phases. But I have a first tweet for you guys that I want to introduce to you. And this Twitter user said, "If she ain't buying you Nike tech this Christmas, you're in the wrong relationship." And I know this tweet is kind of funny, but I wanted to highlight it because yesterday, Alix Partners released its forecast for holiday retail sales this year to be 1 to 2.6% an increase from last year's sales of $1.1 trillion. And further to dive into the report, the survey showed that 45% of consumers plan to buy most of their holiday purchases online this year. That's up 15% from last year. And in fact, 3/4 of consumers plan to spend the same or more on apparel, toys, and footwear, among a few other sectors there. But I think footwear is so important here. And the fact that Nike has the athletic apparel and the footwear that everybody wants their hands on, it seems like it's going to be really well positioned going into the holiday season this year, especially as more people are planning to do most of that shopping online. But I do have another tweet for the two of you today, and this tweet is part of a longer thread. But this Twitter user said that at a time when the word community feels cliche and overused, Nike's built a membership of 170 million plus. Their goal is to create direct customer experiences that fuel personalization at scale. The key to the strategy is their 4 apps. And the 4 apps that this user is talking about is Nike's main e-commerce app, the Nike Sneakers app for its sneaker releases, as well as its Nike Training Club and Nike Run Club. And the Twitter user is right here that as of November 2019, Nike does have 170 million users across its family of those 4 apps. But in the past quarter alone, they've been increasing its users and apps both in the US and in China. In fact, we're seeing that the increase in its users for the apps has also been increasing its digital sales. Nike COO even came out recently and said that Nike really wants to create that direct, unbreakable relationship between its customers and the company, and that the best way that he knows how to do that is through its customers' smartphones, which we have on us practically all day, every day. But Kevin, with the growing popularity of Nike's apps and the increased shift toward online shopping this holiday season, how well positioned do you think Nike is to be a winner in the retail space going forward?
Yeah, the answer, Evelyn, is massive. And here's why. Stifel did a survey of back to school shopping. Okay. And now I want the young men, you know who you are, the guys in the control room, to listen to my statement. 3% of the shoppers chose Vans. That's all you guys in the control room. I know who you are. And 16% chose Adidas. Remember, 3%, 16%. 78%, Evelyn, chose Nike. Nike. So everything I've been telling you young guys in the control room for years is coming true. So young people are choosing Nike products, not Vans. And this direct-to-consumer move by Nike is they're going to be the winner through all this, Evelyn. And it's several-fold. It's not only their focus on direct-to-consumer, but it's their focus on quality of their shoes as well. That has always been there. So, Evelyn, to put it as simply as possible, Nike is winning in direct-to-consumer and e-commerce. They've cut 9 retailers out of their circulation of shoes as they keep betting on themselves and direct-to-consumer. So, Nike is just hitting on all cylinders right now, guys.
Yeah, Kevin. I mean, I like a good pair of Vans myself, but it's hard to argue with what you're saying. And really, Nike, it may be winning now. It's been winning for a long time, and it continues to innovate. And I think that's what the sign of good companies is their ability to adapt to changing environments. And Nike's certainly been one to do that. But Evelyn, we got to leave it there. Great stuff, great setup here. Evelyn Baker, TD Ameritrade Network contributor. So we say goodbye to Evelyn. We want to welcome in Landon Swan, the co-founder of LikeFolio.com. Landon, I just want you to jump in here, set us up, take us where take us where you would like to in terms of what the data is showing, because the stock is telling us that this company is doing exactly what Kevin's talking about, and that's winning.
Sure. And I'm not going to get into the Vans Nike debate. I'll leave that to Kevin. He seems like he's got that nailed. but with Nike, I will say that, they're doing extremely well, and it comes down to digital. Last quarter, I think their digital sales direct to consumer were up about 75%, 30% of the company, and they're expecting that to get to about half of the company. And so you can see from this chart, obviously they did all right before the pandemic, but when you lock people at home and they still want products, they're going to figure out a way, and that way was digital. And so you can see that sharp increase starting in March and April, and now it's at all-time highs, doing extremely well. So this really comes back to, is this a permanent behavior change for consumers, or once things open back up and it's all normal and no one's scared anymore, are they going to start going back to the stores? And I think Nike's really betting on the direct to consumer. And either way, I mean, I'm sure that they could always go back and get more retailers. People would love to be able to sell their products. So I think they're safe either way. But if it does have that effect of a permanent behavior change, then they're going to benefit because the margins are higher. You don't have to sell at wholesale prices. You sell at retail prices, much better. And so companies like Foot Locker are they're in a little bit more danger when Nike goes around them. But if you look at the quarters, it's interesting because for the last several quarters, excluding the quarantine quarter, they're just over 10 billion in revenue. Just every single quarter. And then, of course, they got drilled last quarter. But largely, I think there's a lot of debate on the street as to where they're coming back to. I've heard as low as 7 and as high as 9. So people think that their analysts believe they're coming back. Our data, if you look at purchase intent, is very high. We think they've made a great comeback over this last little bit. A huge spike starting in March. Again, a lot of that has to do with digital. People are talking about getting onto their, sneakers app or just direct to consumer offerings that Nike has, and purchase intent has hit all-time highs in July or August. It's pulled back a little bit since then, but if you're talking about the quarter that's being reported, that is all-time highs as far as the 90-day moving average. So very strong numbers coming out of Nike, but as Evelyn mentioned, it's just off all-time highs. I think maybe 5 or 6% off of all-time highs. So valuation's very rich. And it's just a matter of, can they meet analyst expectations? And frankly, those expectations are a little bit murky. No one really knows exactly where they're coming in, other than much higher than last quarter.
Landon, Nike has made a bet on itself, cutting all these 9 retailers. And for the record, it's Zappos. Who owns Zappos? Amazon owns Zappos. Belk, 300 stores. Dillard's, 285 stores. Vim is 31 stores in New York and New Jersey. They are making a bet on their own direct-to-consumer e-commerce. And oh, by the way, something that'll play into this quarter's earnings that shouldn't be neglected. What came out during the second quarter? The Last Dance with Jordan. that sparked big interest in Jordan Brand and Nike in general as that show went so virally popular. So that should give a boost to some of those products. But I think, guys, and Landon's data shows it, the mentions from digital is spiking. The customer, the purchase intents spiked and look like they're coming down just slightly. But I'm coming very close to being way too positive about Nike. So I'll stop here, but I think they're doing this right. They are embracing direct to consumer, and I think that's a game changer for them, guys.
Landon, if I can jump in real quick here, I got a question for you because this all ties together. You pointed out the biggest question mark with this is just what is the street expecting? And, sometimes that's the hardest thing to wrangle in. And so I want to take this a little bit outside the box here, kind of these final thoughts, because obviously your story you're painting is positive, but we just don't know how positive it has to be. We talked about how well Peloton's done. We talked about how well Lululemon's done. I think the story for Foot Locker is a clear one that it certainly isn't positive. But where are these other companies impacted by Nike? Where does Nike come in? Is Nike low key Peloton's biggest competition because they have these apps too? They got a strong brand name too, and you're probably not going to be on 7 different training apps. If Nike's grows and gets popular, isn't that a risk for Peloton?
I don't know about that. I think that the more people that get athletic and get into activities and the more sports come back, it's just better for Nike. So I do believe that includes people working out from home. And so I don't really see them as direct competitors, even though I get the app angle a little bit. But, just to kind of go back what you said on Foot Locker, what's interesting is they're one of the few companies that we've kind of unexpectedly, they're doing well. Their purchase intent is up very big, and it's mostly because of the Jordan Brand. So Kevin, great point. Last Dance came out at fantastic timing. You put people at home, you make them watch TV, and then they're watching it and they're getting on their phones and ordering some Jordans, or they're going to Foot Locker and ordering them. So that was big. In fact, the sneakers app we've seen that have a huge surge in demand because of that type of enthusiasm around the brand overall. And Nike had a happiness drop. This is crazy. From about 66 down to 60, and almost all of it was attributed to people who were frustrated because they couldn't get the new sneaker drops on the sneakers app. And so I don't know if we need to recalibrate how we measure happiness, but it's basically because they were sold out. So really interesting stat there. And overall, Nike's doing extremely well. But like you said, Alex, it comes down to analyst expectations. My guess is that it's not going to be so much on the total revenue as it's going to be looking at how well is that digital doing. And our data, as we showed earlier on that earlier chart, digital is at all-time highs. They're absolutely crushing it. I think down the road, probably their biggest upside is going to be how well can they do with women. I think they're only about 10% of the women's market right now. They've got to kind of set their targets at Lulu and try to take a little bit of piece of that pie. If they can do that, I think that'd be a huge boost for them long term. My guess on this report is digital is going to be the main thing that people look at. But if there's a surprise on revenue or in the women's share market, either way, I think that could weigh heavily with analysts as well.